Well, here we go again. Another day, another dollar. Oh, another jobs report. Another set of delayed data from the federal government, making us think, you know what? Maybe we just don't care. We did get ISM services this morning, which we also got the S&P PMIs, which missed. It's a little bit of a mixed read across both. Let's take a peek here at services PMIs. These out this morning. Haven't taken a peek at the actual report yet. This did come in at a miss. Report issued. Let's see what they had here. So we had the employment index contracted for a 6th month in a row. Supplier deliveries index 54.1, 3.3 percentage points higher than the 50.8 recorded in October. Okay, so inventories saw the increase. This is exactly what we saw in the manufacturing reads as well, that inventories were starting to pop off a little bit. However, most industries reported growth, although there is a downward trend in the 12-month average since 2022. So we're kind of slowing down a little bit. Some of this could be because of air traffic disruptions regarding deliveries, fines, sector performance, very inconsistent, residential home sales hampered by mortgage rates, increased activity, end of the year push, that's good, business slow due to tariffs. With the end of the government shutdown, we resume normal operations. Tariff uncertainty still adding complexities. Business ramping down. Anticipating demand to be consistent. So none of this seems to be a big issue so far. If we look at employment, we have respondents include filling vacancies and still not getting enough applications for positions. So, nothing wild here suggesting there's some kind of fall off a cliff or whatever. So nothing crazy in the ISM read here. Nothing crazy in the PMI. Just a continued sort of contraction in employment, but also this complaint about a lack of available employees. Obviously, this morning you had this little brief shocker in the pre-market about Microsoft lowering targets on sales growth. When you actually read through it, it's not like super bearish. They're going from like, all right, maybe instead of sales growth at 50%, we'll just go with 25%. Microsoft apparently then emailed CNBC and told them that was bullcrap. So Microsoft is disputing this. So who knows if this is like one team and then it leaked out or whatever. Here's a post. Charles Schwab CEO says clients are asking how to protect their wealth after market gains. Yeah, no kidding. Diversifying to house hack. That's how to protect your wealth. That's how to explode your wealth. No, I'm just kidding, guys. It's obviously there's a risk with every investment. Read the offering circular. But we did have Besant yap this morning about enthusiasm, and then Lutnick this morning on robotics. It also seems like there's some kind of issue with Hassett. So this is kind of my take, but what I'm gathering, and the Economist could have something to do with this. Remember, Kevin Hassett is a wet blanket, and it sounds like a lot of people are getting pissed at the idea that Kevin Hassett might be getting chosen. So that might be delaying Trump's announcement here because, well, let's reconcile this. First, Trump told us that he would make an announcement this week. Trump first suggested he'd announce a Fed chair this week. Okay, that flipped after he suggested Hassett. Part of that may be due to economists, The Economist, and others, right? Like The Economist, Economist. Papers like The Economist, it's a newspaper, not to be confused with The Economist, and others complaining about Hassett versus Waller. Now, I've said before that, Hassett's just a shill. right? I've argued Hassett is a shill. Myron has impressed me more, but he's already got a seat that expires in 2026. So, unclear. I don't think Myron's really in the running here. And you may as well leave him as a shill as long as you can. Hassett is already a shill. I don't think that he's very good at what he does. Waller, I think, is very good. And then I make the argument that Warsh is terrible. He will not I think he would make a recession worse. He'd make a recession worse, not better. Waller, I think, is economically principled. So that's my opinion on sort of the Fed watching that I've been doing. But what is it? Just one L? What the hell? Oh, principled. Okay, whatever. So President Trump said he had decided whom to nominate, and he has since said he will make his choice. And then he walked back this week. Then Trump walked it back and said early next year. I think he got a lot of complaints. So let's see here. Mr. Trump is desperate for the Fed to cut interest rates faster. He tried to oust Lisa Cook. We know that. And interestingly, cutting interest rates faster is probably the correct move anyway. Myron's voted for bigger cuts. Hassett would be the paddle in the same direction. Comment for the Fed chair to have party affiliation. That's fine. And we're not suggesting that it can't be, a pro-Trump candidate. It's going to be somebody pro-Trump. But it should be somebody that's economically principled. And I don't think that's Kevin Hassett. So what does The Economist say? The question is how much Hassett would care about the risks. Right. What risk? Like central bank or debt? Setting interest rates to keep Trump happy or debt cheap rather than control inflation. Right. I think that's a fair question. Economist argues Hassett may not pay attention to inflation. And I'm going to say this this is ironically. Cutting IMO, if Kevin were the boss, okay? If Kevin were the boss, I'd rapidly cut rates to 2%, maybe even 1.5%, and then I would remove tariffs, okay? If you did those two things, we'd almost guaranteed stick a soft landing without inflation. The disinflation trend could continue. You could support the economy. Worst case, just move rates slowly back to zero. Slowly decide if lower is necessary, but get to 2% ASAP. That's Kevin Fed chair, okay? So this is, hypothetical, meet Kevin Fed chair, right? Fed chair and president, okay? Neither of those is going to happen. So it's totally hypothetical, right? But anyway, that would be my best case bullish excitement. So this Hassett question, would he care about inflation? Ironically, I don't think that matters. So the inflation issue matters less than saving the economy right now. So that's my take on this. Okay, now Trump's corporate taxes. All right. While working for Trump, he behaved like a party hack who was unconcerned with reality. In 2017, his very conservative estimate was that Trump's corporate tax cuts would boost household incomes by $4,000, far above other estimates at the time, although that may have happened. And then in 2020, his cubic model of the COVID-19 pandemic projected that deaths would soon cease entirely. That was in May, so that'd be like before Delta and Omicron. Absurdities such as these have torched his reputation. Even before entering the White House, he was known for perhaps the worst investment thesis in history. In 1999, near the height of the dot-com bubble, he co-wrote a book predicting the near quadrupling of the Dow. No! No! Bro, no! Okay, like, we already knew he was a shill. But The Economist is what's torching him here. Economist is torching Hassett. I didn't even know this. 1999, Hassett wrote a book calling for 4xing of the Dow right before 2000 crash. May 2020, COVID deaths will all soon cease. You know, the other one is not such a good analogy, but because I actually think that could have happened. So I'll say it though. Economist thinks his 2017 estimate of household incomes going up by 4K was extremely high compared to other estimates at the time, though I think that may have happened. They're trying to show him as someone who basically will always see no evil in you know, Trump plans, right? Okay, so there's a candidate who's far superior. Chris Waller sat on the board since 2020. I like Waller. You know, I actually think he's good. He would be my choice. I would choose Waller. Let's see here. In 2022, let's see here. Waller disagreed and was proven right that there wouldn't be a surge of unemployment yet. He foresaw weakness in the labor market that struck in July, which caused the Fed to take a dovish turn. Over long periods, his judgment has looked sound when his colleagues, compared with his colleagues. He was dovish in 2010 when the economy was weak. He was hawkish after the pandemic as inflation was taken off. I mean, this is all accurate. Waller wants to lower rates. This newspaper is not convinced inflation is still above, but there's little doubt that Waller is making his case in good faith. That's actually very interesting that The Economist is shilling this. Economist is shilling Waller even though Economist is fearful of inflation. And Waller wants lower rates. They respect him, basically. And I generally respect the writers at The Economist. Like, I think they do a pretty good job. I generally read so much of their stuff online that I don't read their magazine, but I just picked it up and I love this cover. You know, people say that they have a case of TDS, you know, Trump derangement syndrome, but everything that they say is kind of right. Like, you know, the whole like Trump crypto and selling pardons and all, it's all like grift, right? But let's just kill the Addy, I suppose. There we go. But yeah, I mean, like, I get The Economist. I think it's pretty good. Hashtag not sponsored. Look at that. MAGA hack. Anything goes America. And it's, you know, pocketing wealth from the office. They're not wrong. Okay. What else here? Mr. Trump, that's a bad thing. The president should be careful what he wishes for. His main political problem is high prices. Yeah, and yesterday Trump actually talked down the affordability crisis. You know, yesterday Trump said affordability was just a buzzword and a sham. Can't remember which one he said it was, scam or sham. But it's actually kind of interesting because it suggests that, you know, Trump is sort of lashing out a little bit about his inability to deal with the inflation issues that we're seeing. So, let's go take a look at, Oh, it looks like Cassandra may have said something here. Cassandra. But I'm blocked. I don't care. 12 months 12 months a year, Cassandra Unchained will donate 5% of subscription revenue to a selected charity. Okay. Christian Gale. Okay. All right, so that's donation. Available today. Pitching. I wonder how much SpaceX pays for these ad spots on X. Probably nothing. Oh, and then he bags on Elon Musk's pay package. Okay, yeah, that's old news. So that's not a surprise right now. And the Qs are barely positive. I think we got a little bit of a speed bump, unfortunately, this morning because of not only the Microsoft news, but the ADP news. Although, keep in mind, you know, we basically guaranteed the rate cut. So let me actually go pull what the odds are right now. What the hell? Oh, there it is. Okay, that's better. Okay, I was wondering what was going on over there. Okay, so, Intuit's finally got a little bit of a pop. Look at that. Nice little pop there off the line. Right on my line, within 10 cents of my line right there. You can steal my lines, by the way, if you want. You know, I don't mind. You can steal my lines. I'll let you steal my lines. So that is the 630 even line. And we just had a bounce at 629.9 on Intuit. And it's a big one. It's a blue line. So the December 10th meeting is now at 97.6%. So we're basically guaranteeing it. Let's go write that down for the Fed. So rate cuts, we're looking at now 97.6% D's 10 cut. And then the Kevin birthday cut is 31%. Jan 28 cut, Kevin birthday. Yeah, boys and girls, give Kevin a rate cut for his birthday. So somebody says, my financial advisor said as long as the rich keep spending, the market goes up. Right. Well, but the problem is they have it a little backwards because the rich stop spending when the market crashes, right? So like, What you have in that sentence is you have the missing piece of the pie, and that's shock. So we're in a shock-prone economy right now. We don't know if we're going to have a shock. A shock could be the Challenger layoff plans, and all of a sudden we see them. We could have many months in a row of negative employment. We could also have the Japanese carry trade again, or probably less likely. I think that is less likely. But a private credit crisis is probably more likely. Somebody says, Kevin, how do you come up with your lines? Experience, skill, strong research, and a little bit of luck. No, really. Usually what we do is we actually, there are two ways I look at lines. Well, there are a few different ways I look at lines. I look for consistent bounces, over the historic charts. I look at psychological levels. I look at fib retracements. And I usually start the lines out as gray. And then going forward, if my lines don't work, I delete them. And if they're gray, they're like low likely to work. And then as they get better over time, I upgrade them. So like if I see them working, I'll upgrade them from gray to white to green, then to blue, then to purple. And then if there's like a really good line, like a Tesla, 414, you'll see like the deep purple, or you'll even see orange as well. So here's a deep purple is a 414 line. And then 318 and 295 are legendary lines, really good lines. So if we're ever like crashing, if we crash off of 414, 347 is a really good level. Although we recently got this 383 one, but that was aligned with the 595-ish on the Qs, I'm pretty sure. But anyway, yeah, so that's overtime. Somebody's asking about TLT. Yeah, so, TLT really just sucks. Unless you get jobs falling off a cliff, and it's really difficult to time that. That's very, very. I don't think it's really timeable. I actually do think that TLT has some potential as just even a buy and hold because you can, it's at 90. If you trend towards recession even slowly, or it's at 89. If you trend towards recession slowly, it should slowly come up with rate cuts slowly. But it's been a slog. But you're picking up a 4.3% dividend, So it's interesting. Okay, good. So let's go see what else is news. Obviously, we saw the ADP stuff this morning. Somebody says war starting. Ironically, wars are usually bullish. It's not bullish life, it's bullish stocks. It's quite bearish life. Like short, if there's war, you short life. I'm not sure that's possible. But anyway, short population, I don't know. I'm sure there's like a betting market for that. I don't play the betting markets. But anyway. So, this is problematic, right? Payrolls, this is the ADP report this morning. This like the average here is negative from June and July. So it's incredible. Somebody says a random line on the chart will always have a reaction. No, that's not true. It's actually not true at all. No stock trader will agree with your sentence that some random line on a chart will always work. That's not true. The lines are powerful because we keep revisiting them. And they give us an opportunity to make short-term plays. Like, for example, when we looked at Tesla. So when Tesla was over here at the all-time highs, you fact-check me on this. You go back through my videos, whether they're my public videos or even my course member live streams and the alpha reports. I'm like, guys, this is going back to 414. It's going to go back to 414. And look what happened. We went right back to 414. We actually went over 414. But the only reason I said that is because I didn't think holding 433 was durable. It's not as strong a line. I thought we were going to go back to 414. We ended up breaking through it. But it's a tool for suggesting, hey, what direction do we think we're going to go? For example, look at Symbotic. I think this right here is very frothy, over 64. And so yesterday morning in my alpha report, I said, hey, listen, Symbotic, I said it right here in the morning at $80. At $80, I'm like, I am bearish Symbotic. I think it's going back to the 64. We tanked like 21% on Symbotic yesterday. Most of it during the actual day. And it's because of the lines. So I love it. I see us play our 617 pretty regularly. Even did this morning on the Qs, and it's been up since then. And I'm bullish breaking through here on the Qs, really at least through December 9th. But I've actually become a little bit more bullish now in the short term for the Qs, mostly because I don't think we're going to get that hawkish of a cut anymore. So I think the hawkishness of the cuts go down. Why do you like the average candlesticks? Well, the average candlesticks are better for quick glancings at what's going on. You don't want to, you turn them off to trade, right? But they're easy to, it's just a switch. You just click a button, you turn them off and on. But anyway, so we got this rate cut. I do think this will be less hawkish now. Likely less hawkish due to ADP. Okay, so now let's go see what some news is. Somebody's also asking for the Redfin news. They have a newsroom, right? Is it in their data center or where is it? That's probably not in their data center. Maybe in their press? Redfin's 2026 predictions. Welcome to the Great Housing Reset. Wow, what a title. Wow, look at that. Welcome to the Great Housing Reset. The Great Housing Reset will take place in 2026. It won't be a quick price correction or recession. Oh, so no recession is what they're betting on. A year-long period of gradual increases in home sales and normalization of prices as affordability improves. So this is bullish lending, by the way, right? Like this right here, very bullish being a realtor or lender because you want volume, right? 'Cause, right? Good. 'Cause, right? 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 ' Incomes will finally rise faster than home prices. Oh, well, bullish. Okay, mortgage rates will dip to low 6. I mean, a weakened labor market will lead the Fed to cut. Yeah, but Fed cutting does not mean mortgage rates down. Okay, so there's a little issue here. Fed cutting, equal sign / mortgage rates. You know, that's based more on the 10-year market. Somebody says, is house hack investing in prisons? No. We almost bought a property once next to a prison, but we never did. We're like, do we install security cameras or not? Like, do we want to know or do we not want to know? But no, we don't and didn't. Redfin expects median home sales prices to rise 1% year over year in 2026. Prices will take up marginally because of high interest rates, along with a still weak economy. More time to buy, baby. Home prices will grow slower than wages. It's also good for rents. Home sales will rise 3%. This is really bullish lending, okay? So, like, if you want volumes, man, okay? Rocket Mortgage, baby. Rocket Mortgage. LDI is another good one. Although LDI's had a little bit of a meme bounce over here, which was unfortunate because you know how momentum goes, right? Momentum always has to come back down. But what's another one? United Wholesale is another one, and then also, well, yeah, I guess Mr. Cooper is now owned by Rocket. I think Rocket, like this is an amazing company, and they just bought Mr. Cooper and Redfin. So smart. Redfin, which we're reading a Redfin report. Sales will increase slightly. I expect stronger home buying season in 2026. Mortgage rates. Okay, meaning sales will increase slightly. Affordability. People on the fence. AI takes a toll on the white collar workers. People are fearful of losing their jobs. Rents will rise. Let's go. That's good for owners, not good for renters. Rents to rise 2 to 3%. Roughly the pace of inflation. Good. So not above inflation. That's good. Apartment construction has slowed from its surge. That's good. Oh, that's interesting. Some areas like Southern Florida and Southern California, tightened immigration is likely to put a lid on rental demand. Usually you see this in apartments, less on single family, typically. But that's probably accurate. Probably true. More likely units than SFD's IMO. Okay. How housing costs will reshape households, more roommates, fewer babies. Oh, that's unfortunate. I like babies. Oh my gosh, you all gotta see Summer. Oh. Let me see here. Summer. Summer sunshine. Oh, who wants to see summer sunshine? Hold on. I gotta push that button. Hold on one sec. Okay. There we go. Now it'll work.
What do you want, Summer?
It's too cute. It's too cute. I just want to go hug her. Oh, too cute. Anyway. Gen Z, millennial, homeownership is flatlined. Redfin expects the trends to continue. Redfin also accepts more friends to pool resources to buy homes together, often with prenup-style agreements. Man, that sounds stupid. This is a horrible idea. Terrible idea. Terrible idea. How old is she? She's 21 months old. So more families will renovate their homes. Okay, this is I could not be more bullish on our renovation AI at House Hack. Like, I honestly think, oh, it's helium. You have to use code Kevin. Me future, yeah, helium code Kevin. But that's the affiliate you're asking about. But the Reinvest AI for renovations is going to be so freaking clutch because it's going to be like having an AI consultant for renovations that cares about your freaking net worth. We think we could sell that like nationwide to people outside of our reach on YouTube as well. Like, we think we can make that mainstream. So it's really exciting. And hey, if it takes off and we don't go into a recession, it's bullish IPO. I mean, no guarantees, obviously. Prediction: affordability crisis will unite policymakers across party lines. Voters in the November election, especially younger ones, made it clear that lower housing costs is a top priority. Other housing proposals: zoning changes make it easier to build ADUs, blah, blah, blah. Affordability crisis will unite. Yeah, but they're not going to do anything about it. Government makes things worse. Americans will refi and remodel. Yes. Yes, baby. Yes. Redfin expects a level of mortgage refinance volume to increase by more than 30% in 2026. Yes, that absolutely. Somebody says, why are homes with a prenuptial bad idea? Well, they said friends. They didn't say relationships. Friends pooling resources. Bro, you don't want freaking partners in home ownership. It's such a freaking illiquid asset. You guys are going to kill each other. A terrible idea. Blech. Redfin anticipates more homeowners tapping home equity to fund renovations. Totally agree. HELOCs or cash outs for remodels. Renovating their current home is more appealing. Totally agree. Big boom for construction. Totally agree. Climate migration will go hyper-local. Hurricanes, blah, blah, blah. People won't make big moves. Blah, blah, blah. People stay puts. Maybe get off the hills, whatever. NAR will let local MLSs call the shots. Okay. For consolidating. Whatever. AI will be a real estate matchmaker. Yeah. But it's the reality is nobody's doing a good thing right now for this. You know, in my opinion, like, you're finding people doing like, oh, tell us what you want or whatever on Redfin. But it's the fact that it's been 2.5 years, almost 3 years, and like nobody has good real estate AI is crazy to me. But I think this is bullish what we're doing House Hack. And I'm not saying, it's going to be winner take all. Like, there could be a lot of real estate AI. But I'm just seeing just trash right now. And I think it's such an opportunity. This was a great piece. Whoever shouted this Redfin thing out, great. Somebody says, but aren't we friends and I'm invested in homes with you through House Hack? Yes. Yeah, I mean, well, presumably, if you are actually invested in House Hack, I believe you. But, yeah, the difference, and this is how to make it work, is I'm the boss. So, like, if you are going to partner with somebody, you have to make it very clear that one person is the sole decision maker. Do not do multi-decision making. That's why House Hack is structured the way it is. I'm the boss. Otherwise, it's hell on earth to partner for real estate. Very bad idea. Don't do it. Don't do it. Please don't do it. Please don't partner with anybody for real estate. Again, unless you're giving total control to somebody else, or you're the one in control and you're doing it yourself. That's fine too. I'm not saying don't do that. Okay. What else? So we talked the Economist piece. That was cute. The Hassett delay is interesting. Not my favorite thing to see. We saw the doomers on the ADP drop, which is not good either. Let's go look at the journal. How do we get your real estate AI? Reinvest.co or househack.com. I know the .co is, oh, thank you. Appreciate that, Darren. I know the .co isn't that sexy of a domain. Like, I would love the .com, but I'm not going to pay $1 million of House Hack money for that. We've got the cash. We could buy it, 9 or 10 times over with just extra cash sitting around. But I don't want to do that. It's a waste of money. And honestly, I don't think for apps the domain matters that much. The app matters more. Yeah, we just got approved by the App Store as well, so now it's just a matter of us pushing it to people, so it's pretty exciting. We're getting really close. Okay. Let's see. Hegseth, Penacon, Kamikaze drones, hiring, ADP, immigration crackdown. Vanguard joins push to 401s. Trump pardons Texas Democrat indicted on bribery charges. Wonder how much they donated. 3 strategies that can cut your tax bill. Partnerships in business are the only ships that don't sail. I don't know where to put that one. That's dad level right there. Although I usually like the dad jokes. I got some. Didn't I get some new dad jokes? I think I got some new material. Let me see here. Let me see. All right. Oh yeah. I mean this one's maybe less of a dad joke. Is that it? Let's see. How do I? Why is that it? Where is it? I can't get it. Okay, I'll do a different one. I don't know. Here's a stupid one. I'll do this one. This is a stupid one I wrote down, but I like it. All right. I took a poll recently. It turns out 100% of the people in the tent were mad. What's red and smells like blue paint? Red paint. Why does it cost so much to put air in a tire? Inflation. I think that's all I got right now. Oh, this one's bad. I gotta do this one. This one's bad. All right, ready? So a guy with a stutter died in prison before he could even finish his sentence. Dude, that's effed up. Oh man, that's effed up. Oh, jeez, man. Oh, jeez. Woo. Oh. Oh. Oh, man. So, max out your retirement. Let's see here. Whether you use an individual retirement account, solo fund. You know, they should really pitch the SEP. The SEP is great. Yeah. So let's see. Solo 1K contribution can be up to 70K per person. Right, but what's the income requirement on the solo? Solo 401K income requirement. You must have earned income, but how much? Contribution. Let me see here. Let's see. So I'm wondering if the 401k contribution is limited like the SEP, because the SEP only lets you do 25%. Oh, here we go. Here we go. Adam prefers the solo to the SEP because the contribution limit is higher due to the catch-up provisions. Yeah, but the catch-up provisions only matters if you are older, which that's fair. And you can set up a solo pretty easily. Be charitable. Okay, that's fine. Well, the defined benefits pension plan is a pain in the butt to set up, and the amount, like, if you have too much growth in it, then you can contribute less in the future. It's a pain in the butt. Like, you get shoved into like high fee mutual funds. You know, that's what drives me nuts. But let me see the solo. So it's not a percentage. The SEP is 20 to 25%. The solo allows you to contribute a flat dollar amount plus a percentage of income. So it's a 2-bucket. So you can contribute 100% of your earnings up to the maximum. And that's pretty good. Because like if you're in control of how much salary to pay yourself, then you don't have to pay yourself as much of the sal. Yeah, that's not bad. Combined limit, 70K. Oh, but the employer profit share is 20 to 25% of your income. So it just boosts you on the, okay. Yeah, that's fine. All right. I mean, yeah, they all have their, pros and cons. Harvest losses. What losses, bro? No losses, bro. Market moon. Let's see here. Sam says, Kevin, you look good or cool today. FYI, I have a wife. It's kind of like a, hey, I like your outfit, and I'm not gay. But I'm not gay, I'm not gay. I swear. Okay, so let's see here. Man. All right. So this is a little boring. So the Journal's boring. How about the Times? Everybody's talking about the job cuts, which we should look at what institutions are saying about that. Yeah, let's do that. Maybe after the FT. Wait. To raise 200 billion? Oh, okay. Russia says no deal reached. Well, no shit. This is all a scam. Blue Owl executive staff bought 200 million shares after the sell-off. Wow. Anthropic taps IPO? Oh, yeah, you got to IPO quickly. Honestly, not gonna lie, part of me is like, there is a big temptation to go public sooner rather than later to take advantage of the leftover, juice to be squeezed in the AI bubble. Because if you're still at the beginning phases of a bubble, I get it. I totally get this. Yeah, Anthropic tapped a law firm to begin work on what could be one of the largest IPOs ever. That's really bullish, bubble, basically. This is bullish bubble. The maker of Claude would value it more than 300 bill. Right. Pretty large. It's like a Palantir. Okay. The startup also discussed a potential IPO with big investment banks. Aha. Yeah. Okay. People character. So it says, Kevin, is there a subscription fee after joining the Meet Kevin? No, if you want to join the Alpha Report, you pay once. So that's at meetkevin.com, right? You get all the courses and the Alpha Report we do every morning, the fundamental analysis, the stocks tab, so the archive of fundamental analysis and price targets and things like that. Those are, it's pay once and done. People have been in the courses since like 2017. They paid once and it's like, they're chilling, Let's see here. Anthropic. Okay, investors are enthusiastic about an IPO. Could be prepared to list in 26. OpenAI. I don't think that they're going to rush because they're losing too much money. But seeing these financials public. Better IPO before the crash. Yep. You can take it back private after it loses 80% of its value. Yeah. 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 Founders and early investors laugh their way to the bank. Boom, euphoria. Profit taking. In this phase, smart money is heeding signs that a bubble is about to burst, starts selling positions and taking profits. Yeah, but look at this. This was interesting. Blue Owl employees spent $200 million in recent days buying stock in the firm of two publicly traded vehicles after the merger failed. Insiders bought the stock, a signal of the group's confidence in the portfolio amid fears that falling rates and rising redemptions could hit the portfolio. Right. Well, frankly, because like the collapse of Blue Owl would be really bad for future deal making. Very bad. So they gotta prop it up. And it's their job to prop it up. Epstein Island photos, videos released by House Oversight Committee. Ooh. Oh man. What are all those heads on the wall? Is that Dr. Phil? Man, that looks like Dr. Phil. Man, Creepville, huh? Blech. I hate everything about that. Alright, so... Serial defaulter, Argentina readies return to foreign bond market. Right. Maxwell says grand jury material could harm her case. Regulator quits. Freed by Trump, $200 million fraudster started a new scam. Well, what a surprise. It's like, once a fraud, always a fraud. Like that Trevor Milton guy, right? YouTube creators find a new consumer for AI slop, babies. Oh, my lord. Entertaining children with AI slop. Let's see. Big banks partnering with Coinbase on crypto pilots. Yeah, that's very common. It's bullish Coinbase, honestly. Big banks are leaning into this as an opportunity. Yeah, I agree with this. I wonder, because you could really use them as like a financial backbone. Especially intermediary. So let me go see, how's Coinbase been? So Tesla's up 3%. That's quite nice. And the Qs are recovering very well, so that's good. Let's go see here. I've got... there's Bitcoin. And then let's pull coin in. Coinbase at 275. So it's come all the way down to... Wow, look at that. Went all the way down as low as 231. $74 billion company. Huh. Robinhood over 230 or 132. That's pretty nice. All right, so let's now go. Let's get some institution pieces. Institutional. Okay, let's see here. Let's see what they're up to. Alrighty, so charts, trade progress. The challenges remain. Boring. What did / could go wrong? Okay. Let's see here. We'll look at that in a sec. Vol, panic dead, protection, puked. VIX seasonality sets the trap. Ooh. Okay, that's the market here. Hawks and doves at the Fed. Voting intentions from the Fed. Kind of already have a really good idea of what's going to happen there. Intel. Asia outlook. Airbus. Let's see. How about basics? What do we got here? Dispersion of AI. Oh, yeah, we could look at that. Okay, so we'll look there. What is this? Analog semi-squeeze. Okay, that's the Marvell. And then we have, ooh, a Hugo Boss piece. I like Hugo Boss. Okay, we'll take a look at that. And what else? From the suits, Deutsche Bank, Luxury Outlook, Business Services, Citi, BNY, Barclays, and that's it. Okay, let's go find out if there's anything juicy in these. So crypto and Ethereum. Ethereum is poised for its major protocol upgrade. This is D3 Fusaka upgrade. Scheduled to activate this block. Cool. Scalability roadmap. Every node downloading scoring lever 2 data, splits the data. Each node now holds a fraction of 1/8. Ethereum can still guarantee, blah, blah, blah. Resulting resource requirements. Theoretically, 8x increase in data capacity for layer 2s. It's all just bullish like Coinbase because they can put all this stuff together and functionally do things for banks. Where's this, what is this? Macro. U.S. Proctor calling out weakness in the U.S. yesterday. Not a competitive backdrop. They called out the government shutdown, uncertainty around Snap. Yeah, but that's old news now. U.S. discretionary companies. A number of U.S. discretionary companies have raised guidance in the last 2 weeks, including Best Buy, Kohl's, TJX Gaps, Ralph Lauren, Dick's, Ross, American Eagle, and Abercrombie. Holiday season was off to a solid start. Consumer... It's wrong to say the consumer is weak, is their argument. Who is this? This is Goldman. Retail. Amazon had to cut seller fees in Europe. Staples. Luxury. Warning on 2026. EBIT guidance that is 20% below consensus, while expectations were low. Pitches 2026 as the year of realignment. They expect sales to decline. Gross margin is expected to be better year on year due to sourcing. Getting around tariffs, probably. Interesting. So, Hugo. Let's go see how they're holding. Hugo Boss. Does anybody even invest in this? This can't be right. This has, like, no chart. Hugo. AG, Bossy. Oh, looks better. Yeah, there we go. There's your week chart. Man, look at that. It goes all the way back to 2013. Dividend, almost a 4% dividend. Wow. Okay. What else? Japan. 30-year, the highest level in history on Japanese bonds. The delay of the Fed chair decision Q1 took some sting out of the sell-off, but the focus needs to stay on the Japanese volatility. If the market feels the BOJ is behind the curve, it will push for an outcome. Right. Basically, if fear BOJ behind, people sell. The carry trade just exacerbates selling. Carry trade likely exacerbates selling when we have it. I don't think it necessarily causes it. Failed to produce meaningful talks with Ukraine. Yeah, that's not a surprise at all. Marvell and MongoDB both guided bullishly. Let's see here. AI, Trainium, Code Red, we saw that. Winners and losers are rotating. Anthropic, looking for IPO, right? November 2025, App Store spending grew 6% per year, decelerating from 9% in October. Okay. What did and could go wrong? I don't really care what you got right. Let's go see the future. Okay. Let's see. Beginning of the cycle. Beginning of the end for the property drag. Right. Rebound in sales. Totally agree. Redfin talked about that as well. So what's going to happen? Activity is slowing into year end. And there'll be an artificial, as the artificial bump in consumption and property fade, with organic demand drivers and wage growth tepid. Okay. Let's see here. This is China. Oh, the whole thing is China. Oh, okay. Well, so that is related to China, not here. I see. Okay, this is just their China piece as we're getting started into this. Yeah, I was wondering what they were talking about with this property fade thing. So this is just their China piece. All right, that's fine. So for China, final key will come in March. Official growth targets. Biggest risks are structural drags. If Beijing does nothing, the economy will perform as it did through the middle of 24. Politicians appear sanguine on current economic conditions. Chance stimulus will come later than expected. They've been pretty... I mean, they've tried to stimulate, but they've been a little bit slow on it. All right, so that's less fun. Microsoft earnings. Oh, yeah, we analyzed some Microsoft this morning. Here are the S&P PMIs. That's no fun. Okay, fine. So that's pretty straightforward. I've got Q's. Still up 15 bips. Nicely recovering. Look at this. Straight up on the day here. Right. So. Yeah, the new Reinvest lectures. You should see them on your Teachable. All right. So, let's see here. Let's go with... How about... Let's just try the journal quickly and see what we got over here. Nothing. Paul Atkins. Oh, the SEC just wrote a piece. Oh, that's cool. Okay, so... Soviet system collapse. Principles. Promoting. Protect the public. Okay, SEC is going to reform the disclosure rules with two goals in mind. Root them in financial materiality and scale them with company size and maturity. Oh, this has to do with like when companies are public. Yeah, we were talking about this yesterday a little bit. To avoid information overload, our disclosure regime is most effective when the SEC provides minimum effective dose of regulation. IPO on-ramp. Yeah. All right. Fine. Let's go see what else we got here. Bloomberg. Oh, did ETH break? Let's go see what ETH's got. Yeah, he finally got over 3. Man, it's been a run there, hasn't it? On Ethereum. Or a ride, I guess I should call it. So... nice risk recovery here. Let's get rid of this. Meta is still red here, 645. And Doomers. Let's see, Wall Street looks past tech drop. No. All right. Fine then. Besson says White House may veto Federal Reserve presidents. Great. Oh, that's all broken. Fix that. Burry warns AI bubble may unravel within 2 years. Yeah. I mean, that's not an unreasonable forecast, actually. If we jump to... Burry... no, that was just his donation. Okay, that's not.
Former ranking member on the Intelligence Committee. Republicans pull out a win in Tennessee. but Democrats still declare a moral victory. And we'll get into that with our political panel, all after a look at Wall Street. Let's start there right now with Alexis Christoforous at World Headquarters in New York. So far, Alexis.
Thanks, Joe. And more proof today that the labor market is weakening. Private companies cut 32,000 workers in November, with small businesses hit the hardest. That's according to payrolls processing firm ADP. That report, of course, the last monthly jobs picture the Federal Reserve will see before its meeting next week. Now the odds of a Fed rate cut this month have surged to 98%. That is helping to fuel a rally on Wall Street. The Dow Industrial is up 355 points. The S&P 500 adding about 23, and the NASDAQ Composite up now about 50. Yields are mostly lower. We've got the 10-year yield at 4.06%, the 2-year yield at 3.49%. Taking a look at gold, up fractionally at $42,009. West Texas Intermediate up 1% now to $59.23 the barrel, and Bitcoin up about 1.5%, now above $93,000. In stock news, shares of Microsoft down more than 1% after a report that the company has lowered expectations for business customers to spend money on its cloud units marketplace for artificial intelligence models and agents. Microsoft's denying that report, stating that aggregate sales quotas for AI products have not been lowered, and that the story inaccurately combines the concepts of growth and sales quotas. And Spotify Wrapped is here, and it looks like Bad Bunny has been named its most played artist, dethroning Taylor Swift. Bad Bunny earned more than 19.8 billion streams globally this year, followed by Swift, The Weeknd, Drake, and Billie Eilish. Once again, stocks higher across the board, with the Dow now up 362 points. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Alexis Christoforous. That's your Bloomberg Business Flash.
Alexis, thank you so much. I'm Joe Matthew in Washington. Great to have you with us here on the Wednesday edition of Balance of Power on Bloomberg TV and radio, with breaking news from Washington. Multiple reports now about a Pentagon watchdog report into the Signalgate scandal, finding that Defense Secretary Pete Hegseth violated some of the department's regulations when he shared sensitive information from his cell phone on Signal. And in fact, may have endangered troops in the process. We're going to have a lot more on this when we spend some time with Nick Wadhams, and coming up as well, Jane Harmon will join us in studio with our eyes on tomorrow's testimony from the admiral that ordered the second strike on the alleged drug boat coming out of Venezuela. This was, of course, a big topic of conversation as President Trump held his final cabinet meeting of the year yesterday. And sitting right next to him was the Defense Secretary, Pete Hegseth, who made clear that he was not, in fact, the one who ordered that second strike. And while he was watching...
All right. So what we got here? Palantir shifted course to play a key role in ICE deportations. For years, Carpaz declared the data management company to be involved in supporting progressive values, walked away. Palantir Software is helping ICE track undocumented immigrants and deport them faster. Yeah, that doesn't surprise me. That doesn't, quite frankly, surprise me at all. Okay. Let's see here. Okay, what else? Software. Okay, there's not much in that. All right, what else is there? Axios. Let's try Axios. Early data. Early holiday shopping reflects the economy fine with cracks. Black Friday sales rose 4.1% according to MasterCard, excluding autos. Bank of America credit card spending is up 0.2%. Cyber Monday sales up 7%. Big question is what shoppers are buying and how. Biggest disparity between high, middle, and low-income consumers. Procter & Gamble saw broad weakness in October and November. Foot traffic in stores noted strong visits this season. Oh, that's good. for retailers pushing items under $100. That makes sense. Okay. So, we got the Redfin report. We know about the jobs report. Talked this. We talked Kevin Hassett. That's the disaster. We had the Microsoft glitch that got denied. Which there is this CNBC take on Microsoft because apparently they got an email about this. So Microsoft refuted the report. Let's see the deets on that. Microsoft pushed back on the report. Company stock sank 2%. Microsoft spokesperson said the company had not lowered sales quotas on their Foundry product. They don't say much else. Okay, fine. So, what's this? Tesla continues to face challenging phase of margin pressures, intensifying EV competition, and unclear visibility on high margin software contributions. While the company remains a dominant EV brand, deliveries are expected to decline this year. Pricing power has eroded. There's no question of that. Profitability has compressed. Competition from China, autonomy, FSD. Oh, look at this. Downside target on CNBC talked about a 330 here. Well, I've got a line there. Where's my line? 347 and 318. Okay, so not right at 330. Bearish thesis. Margin compression, demand softness, competitive pressures, uncertain autonomy monetization. With an IV rank of 4%, options remain inexpensive for downside exposure using puts. I'm buying January 26th, it says. Why would you, you're making a 6-week bet here. 6-week bet. That seems a little short-sighted if you really thought it's gonna. You really think it's gonna go down that heavily in 6 weeks? Okay. All right. What else? Well, we talked about the Coinbase. I talked about those. Dad jokes. Oh, the Anthropic IPO. Right. That was a big deal. And then, of course, the private credit prop up. Economist doesn't have anything particularly new. Let's see what's here for a moment.
There's the broad umbrella of the fact that there are a lot of very serious questions about whether these strikes are legal in the first place, but there is very little doubt that if you take out the boat, it is no longer a threat and you have survivors clinging to the boat.
Yes.
It would be the same thing as you would see in war, where the laws of war prevent you from going around and executing the people who have been wounded in your attacks. You can't do that.
Right.
So that's how we now find ourselves in this situation.
Admiral Halsey is going to have some interesting things to say as well.
He is, and it'll be really interesting to see the line he walks, because you've seen this from the president and also from Pete Hegseth in his repeated commentary, where he says, hey, I wasn't there.
Yeah,
I didn't see that happen. Mm-hmm. So sort of distancing himself, but also saying...
Dude, Hood's killing it right now. I'm looking at Hood here. You recaptured the 127.26 line, which has been a resistance for us, and it's been a shelf for us. So you've recaptured and broken out of it. All today, mind you. We specifically mentioned Hood in our alpha report as well on this 127 breakout potential. And that was here in the pre-market. So... go Hood. Okay. Alt 5. While it's green, it's under 160 now. Isn't that all-time low? No, 144 was all-time low. Almost all-time low. Bitcoin holding up on that uptrend line, trying to recover. What else? All right. Well, I think we can summarize all this stuff. And, yeah, do a little recap here. All right, let's do that. Let's summarize what we've covered so far. And the Fed's housing reset. Literally, as I want to cover that, you have home purchase cancellations report out. What is this? It says home purchase cancellations rise. 15.1% of all contracts, up from 14.3% a year ago. San Antonio had the highest cancellation rates. Heavy home building in Texas, Florida is giving buyers more options, leading some to walk away. Not surprising. All right. Break it all down. Ugh. Am I out of coffee again? Oh, all 3 cups of coffee are empty. This is bullcrap. Dang it. Fine then. We'll do it without. No coffee for Kevin. Fine. It's all right. We'll survive. Maybe. We'll just have slight tears. You know there's like a moss you can grow in your garden called baby tears? It's Jack's like favorite plant. So anyway, all right. Let's get started. Well, Redfin's talking about 2026 having a housing reset, and a lot of it has to do with the Federal Reserve, which, why all of a sudden is there this big delay in getting a new Federal Reserve person chosen? Donald Trump told us we were going to get the pick this week, but now he's delaying it until next year. Why is he doing that? Well, we might have some insights into exactly why. Plus, we got to break down what Redfin is saying here on top of what the heck happened with Microsoft this morning, because we know AI is what's holding and propping up this economy. And frankly, unless you're a stock millionaire right now, the economy doesn't feel that great. It makes sense. Mostly because 27-week unemployment is rocketing up, black unemployment, a historical recession leading indicator of the most vulnerable getting whacked, is skyrocketing. Pay growth is falling. We just had a terrible ADP report this morning that missed and indicated we're now net negative on job gains since July, which also isn't great. This is the worst ADP trend we've had since 2023, so still not terrible, but I mean, all you have to do if you want terrible trends is look at Challenger reports. Challenger reports tell us not only did we have the worst layoffs in 22 years for an October month in October, which also happens to be the month we're not getting data for thanks to the Schumer shutdown or Schumer siesta, whatever you want to call it. But October, per the Challenger job cuts report, is not only the worst October in 22 years, but also the month that we saw plans to lay off more workers skyrocket by 28.5%. It's a 28.5% increase in layoff plans since March. That's not great. So it's understandable the jobs market and the economy don't feel super great right now. And you've got stats that for Black Friday, stores that had the best results were stores that had sales for under $100 as people are, pinching together the pennies. That said, let's talk about this Redfin housing reset to see will there be any kind of relief for housing for folks, and then also what The Economist is talking about regarding the Federal Reserve, because the economy, I think, over the next 5 months is going to be in sort of critical reset territory. And there's probably a good 5-month set of time to be cautious, save money, reduce debt, get some cash reserves if you can, add some skills, recession-proof skills, whether it's like nursing or the trades maybe, or even recession recovery skills like real estate and lending. But you'll see exactly that actually in this Redfin piece, so it'll be very interesting. But let's hit on this. So what's going on? So the first thing that's going on at the Federal Reserve is this concern over who do we pick. So Trump's like, yo, let's pick Kevin Hassett. Okay. The problem with Kevin Hassett, we all know this, is he's a wet blanket. He's a shill. He's a shill for Trump, and that's it. Myron at least has some impressiveness to stand on, but Kevin Hassett doesn't. In fact, The Economist bags on the guy as being the guy who wrongly called for the Dow Jones at the peak of the bubble in 1999 to 4x and wrote a book on how the Dow was going to 4x right before the dot-com crash. And that in May of 2020, COVID deaths were just going to evaporate. So The Economist and a lot of people don't like Hassett. I personally haven't liked Hassett either. I think he's a wet blanket. And so it sounds like Trump wanted to announce Hassett this week, put out a feeler that it was going to be Hassett, which would be great for reducing rates, but not great for the, status of the Federal Reserve. And I think people sent a lot of backlash Trump's way. And so all of a sudden Trump's walking this back going, no, you know what? We're going to wait. We're going to wait to decide until January of 2025 or 2026. So basically the new year. Now, The Economist is arguing that Waller is a way better choice. And I actually totally agree with them. They think that Chris Waller is somebody who will rightly focus on inflation, whereas Hassett wouldn't. Hassett wouldn't care about the risks. He would only care about making Trump happy. Whereas Waller is a monetary policy expert. And even though they don't totally agree with Waller's desire to cut rates, he wants to cut rates, but he actually has credibility and had multiple correct calls, including being dovish in 2011, being hawkish in 2021, and now warning about jobs and the labor market. So they think he's on the right side of history. And I kind of agree. I think as long as we don't get somebody like Kevin Warsh, it's good. Because ultimately cutting rates is the right decision, and rate cut bets are moving in the favor of rate cuts. We got now a 94.6% chance of getting a rate cut December 10th, 31% chance of having a rate cut on my birthday, January 28th. And I actually think the ADP numbers this morning decrease the risk that we're going to have a hawkish cut on December 10th. So that's continuing our bullish trades for near-term bullishness in the stock market. This is what we've been talking about in the Alpha Report. We've been talking about it on the channel as well. And so far, things like Hood are breaking out, Tesla's breaking out, the Qs are rising above our lines. All three of these we've been mentioning in the Alpha Reports over the past week as breakouts. You've still got consumer stocks recovering as well. Fun, Dave & Buster's, Target, all of them coming up off of their lows. And if you look back the week before Thanksgiving, on the 18th, which was like within a day or two of the bottom of the market, made a whole video called Buy. And people are like, oh, Kevin got flip-flopping. And if you watch the video, it's like, no, we should be bullish between now and December 9th, the day before the meeting. Now, not only can we reiterate that that was the correct call, but we can reiterate that we might be able to be bullish even past December 9th, and the 10th meeting because of this weak jobs data. But that's short-term bullishness because we still have to deal with the risk of an unemployment rollover. Now, Redfin does not think we are going to have an unemployment rollover or recession. So take a look at Redfin's take, which, keep in mind, Redfin got bought by Rocket Mortgage. So if you want to invest in Redfin, you could buy Rocket Mortgage, which I actually don't think is a bad idea. I'm a little biased because I think that's a great play. But anyway, take a look at this. The Great Housing Reset will take shape in 2026. It won't be a price correction or a recession, but rather gradual increases in home sales and a normalization of prices as affordability gradually improves. In my opinion, this is actually bullish being a realtor or a lender. Because remember, realtors and lenders make money off of volume. You want volume when you're a realtor or a lender. A little too zoomed in over here, aren't I? Yeah, I'll fix that later. But anyway, you want volume. So if you're doing loans, cash out refinances or whatever, 2026 could be great, recession or not, because as rates slowly come down, you're going to have more people refinancing. And that's sort of the crux of this reset piece here. See, they argue that the weak labor market will lead the Fed to cut rates more in 2026 and bring monetary policy to a more neutral rate. Now, they're only thinking that mortgage rates are going to go to the low 6% range, which it's worth remembering that the Fed cutting does not equal lower mortgage rates. The problem with the Fed cutting is Fed rates have nothing to do with mortgage rates. The 10-year is more closely associated with mortgage rates than anything else. The problem with mortgage rates is mortgage rates are going to price in the risk that you make a policy mistake and you actually induce inflation again. Unfortunately, Kevin Hassett and the choice of Kevin Hassett has increased the risk of a shock. Remember, we're shock prone right now. You have to remember back in the banking crisis that we had in 2023, we were not shock prone. We were nowhere near shock prone. That was right here. We were totally inverted on the 2's10 yield curve. That's not shock prone. You're shock prone post liberation. So this is when we're most sensitive to any kind of like private credit disaster or AI shock or whatever. Now, Blue Owl doesn't think that there's a shock. You've got Blue Owl executives and staff buying $200 million worth of their shares after their, roll up of some of their funds failed after the Financial Times exposed them. And they're like, all right, fine, we'll go buy the dip on our stock. That is somewhat of a bullish signal, or they're just throwing good money after bad. We don't entirely know. But continuing with the Redfin comments here, they think that home prices will rise 1% in 2026. So it's slow. It's a slow up, which makes sense because rates haven't come down rapidly yet. That's actually bullish for being able to buy, though. And that's what I like, is I have this mindset of I want to accumulate as much real estate as I can. 2022, 3, 4, 5, 6, accumulate as much real estate as I can. And if we end up having a recession and rates go to zero, I think real estate can actually boom, because I don't think this would be a real estate recession. Or we just slowly get rates down and then real estate also booms just by the nature of rates coming down more over time. More so than even Redfin is calling here. I personally think, and if I were the Fed chair, this is what I would do. If I were like in a magical world, Fed chair and president of the United States, I would remove tariffs immediately. I would negotiate free trade in a different way using soft power and hard power where necessary, but I would negotiate free trade in a different way. I would not use tariffs. I think tariffs are a terrible idea. And I would instantly, if I were also Fed chair, I would instantly force rates down to 2%, maybe even 1.5%. That's how I think you stick the soft landing. That's my opinion. And I think by removing tariffs, you wouldn't actually be causing inflation in this case. So now, obviously, my opinion, it's not necessarily going to come true. But that's my bias, if you will. Now, what's interesting is as I'm recording this segment here, we talked about the Kevin Hassett and Waller situation, but look at what just dropped. Front page of the FT. Bond investors warned U.S. Treasury, so Bessent, over picking Hassett as Fed chair. That's probably why the 10-2 Treasury spiked. Treasury Department solicited feedback on Hassett and other candidates in one-on-one discussions. Discussions took place in November before Bessent held his final round of interviews. Treasury declined to comment, blah, blah, blah. But yeah, basically people think he's a shill. Nobody wants to be Liz Truss. Ooh, wow, good call. Good call. Like, you need somebody that you could believe in, and unfortunately, Hassett's probably not that guy. But that's okay. They could pick Waller. Waller would be a great choice. I would be so happy if they pick Waller. So this is great news that people are putting up a fuss, and people should be putting up a fuss over this stuff. It's kind of like the fuss people should be putting up at MicroStrategy. I hate to say it, but Michael Saylor just dropped $27 million on a new jet. Look at this. Net cash used in investing activities increased $15.4 billion. They spent $15.4 billion in the increase for the increase in purchases of Bitcoin and a $27 million deposit on a new corporate jet aircraft. And I think it's hilarious because, first of all, what are you buying a corporate jet for? Like, I get it. If you're investing in real estate, across half of the United States, you need to go meet people. You need to go do your damn job. You're going to have to go fly around and meet people. You got to do your job. But what you actually have with Bitcoin. What are you going to go check on your cold storage in different locations? It's insane. Michael Saylor doesn't need a jet, let alone an $80 million jet. I'm guessing it's probably a G600, somewhere between $80 to $100 million is my guess. Kind of crazy. What's also very interesting is, wow, look at this reference. In 2007, MicroStrategy 101, when not to buy a corporate jet aircraft. They bought a $46 million jet aircraft right before the crash. Holy smokes. Crazy. Somebody says Michael Saylor needs money to fly his mistresses around. Michael Saylor's going to float off into the sunset rich like crazy. It doesn't really matter. Even if Bitcoin and MicroStrategy go bankrupt, he's already sucked his money aside into mansions and real estate and probably other assets that he doesn't tell us about. But anyway, the Michael Saylor thing's totally separate from what we should talk about, which is continuing with this great reset piece here, which is home buying will become more affordable because home price growth will be slower than wage growth. So Redfin is actually making the argument of a soft landing. This is a soft landing argument. It is not consistent with what we are seeing right now in ADP reports. Now, that's not necessarily saying they're wrong. It's just saying it's not what we're seeing right now. In fact, what we're seeing right now is small businesses are getting whacked. Small businesses are cutting expenses, which is smart. I think it's already a little too late to cut expenses. You know, I massively cut expenses at HouseHack, and then took some of that money to invest in real estate and some of it to invest in AI. And what came out of it was this phenomenal AI product that, you know, I want to double down on and maybe even triple down on because, you know, I actually think we might run into an IPO boom cycle of euphoria thanks to AI. And there could be a rush for people to IPO in 2026. And I'm like, man, sign me up. Let's go. let's rocket ship this. No guarantees. This is not a solicitation to invest. Always read offering circulars. Investments come with risk. But look, Anthropic taps IPO lawyer as it races OpenAI to go public. So you've got Anthropic tapping a law firm and talking to investment banks to potentially go public at a $300 billion valuation, which is kind of a bullish sign. You know, it wasn't like Microsoft's lowering AI growth targets wasn't bullish this morning. You know, they came out with this piece right before the market opened. The market briefly tanked, and I'm like, this is not a big deal. And the reason we know it's not a big deal is because we read the bottom of the article, which probably nobody got to. But really, maybe my guess is one group or one sales group says that quotas for the Foundry product were reduced from 50% to 25% growth, which is still really good growth, right? Microsoft overall is denying that these quotas have been lowered. So my guess is the company as a whole is denying it, but, you know, some teams lowered quotas. That's my guess on how to reconcile those stories. Who knows? But broadly, you know, so far this ISM report we got this morning, still talk about trying to fill vacancies for jobs, not getting a lot of applications. Yes, employment weaker, but not falling off a cliff, which is good. This morning, we also, in addition to the S&P ISMs, we got the the ISM report. This morning, we also got the S&P PMIs, which was this, and actually indicated output growth in all 7 sectors still positive, though slower. Things slowing down. A little bit of a slowdown in employment as well, but majority of things were still in expansion. So we're not falling off a cliff, but pay growth is falling. Pay growth is seeing substantial declines, at least based on the ADP reports, and it's worst amongst the smallest of businesses, which makes sense. Okay, so, you know, trying to put all of this together, hopefully Redfin is right. But the bottom line of what they see here is they think we're going to see a lot of potentially people partnering on real estate, which I think is a terrible idea. I think the only way you should ever partner on real estate is if one person is in control. Like, you know, this is why we structured HouseHack the way we did, so we can't have fights with partners. No partners. You know, Kevin's the boss. We will do this. And wow, the ship works. I'm like the dictator of real estate. You know, it's like, we will be doing it this way. And it's fantastic. It works really, really well. But if you have, you get into a partnership, I think this is a stupid idea. They literally talk about prenuptial style partnerships for Gen Z and millennial to try to afford homes together. This is dumb. But they also talk about a renovation boom coming. And if you remember, Warren Buffett just invested into home builders and renovation stocks. Specifically, he invested in Pool and, his home builders. Look at Pool. If you go to Pool's been declining. So maybe, is there an opportunity there? I don't know, but maybe something to pay attention to again. So what you also find is Redfin argues that people are going to renovate their homes more as rates come down. They'll also pull out more HELOCs or cash out refinances to fund those remodels. I'm personally extremely bullish about this for our renovation AI, because if there's going to be an AI IPO boom and euphoric phase of the cycle, and people are going to renovate more, dude, I'm just thinking to myself, like, this is music to my ears for house hack and house hack investors. Obviously no guarantees, but I'm really excited about this. So now, how do you benefit off of this? Well, I think this is bullish mortgage companies. I think this is bullish renovations if we get a soft landing. And broadly, it's bullish the consumer if wages do actually start growing the way Redfin says this housing reset will occur, if it's accurate. And Waller will be a good Fed chair if we end up getting Waller. So we'll see. Obviously, the next 5 months are going to be critical, especially after that ADP information this morning. Bad jobs report, negative jobs, which does, basically guaranteed our December cut and probably gives us less hawkish of a cut in December, which is great. But something you have to think about for the next 5 months, like things that I think are smart to do right now. Number one, brush up your resume. Number two, pay down debt as much as possible. Number three, grind to build your cash reserve. No margin, cash reserve. Move extra cash to an investment account so you don't spend it. I'm a big fan. I sent out a daily wealth, the free daily wealth. Sent out a daily wealth saying, hey, have you set up your auto investing? That was just an example of a daily wealth we had yesterday. And I give an example of how I'm setting up my auto investing to go from salary to investments, right? But then also add skills. I don't think you can ever go wrong becoming a realtor, becoming a lender, becoming a pilot, whatever, becoming a licensed electrician, or even learning how to do these sort of things. These are good. So that's a strategic way to protect yourself. Betting on a stimulus check is kind of cool, but it's a gamble and it's a bandage for what's really happening in the economy. So that's my broad outlook and strategy. Now, with that said, yeah, the employment numbers, I hope the worst ends soon. Hopefully October, November are just bad juju, and we can start getting back to growth in December and January. If we start inflecting, by the way, that's going to be your tell. If you start inflecting on jobs growth up and we start actually going positive again, bullish, man. Bull bear scale, bear bull scale, skyrockets, man. That's when you go bullish AI, bullish debt, whatever, because that's when our soft landing starts sticking. So pretty excited about that. Okay, cool. So that's all I got for us this morning. I got to run, and I'll see you later. So thanks for being here, folks. Check out House Hack by going to househack.com and our Reinvest AI product at househack.com. Reinvest and House Hack.